Hey Patrick,
Hey Mark, hi, how are you doing?
I'm good. I'm good. How are you?
Yeah, I'm doing quite good. Yeah, we are one week before Christmas, and yeah, people are getting quieter. Time is getting slowed down. So yeah, I'm doing actually pretty good. I'm happy. I'm healthy. My family's happy and healthy. So yeah, I couldn't ask for more, I guess.
Good vibes overall. I would, by the way, agree that you definitely notice a slowdown also in the news. So I had a
Mm,
hard time finding a lot of interesting things that appealed to me this week.
yeah, that's a good point. I think right now, at the time of the market, the time of the year, things slow down. People go on vacation. We actually experience this in one of our businesses right now. It's the 17th of December, and it feels like it's the 28th of December. People are really hard to catch. So I think that's the same for most of the institutions out there. And let's be honest, how does crypto evolve? Mostly by institutionals and retail FOMO. And yeah, there's no retail FOMO right now. So institutionals are going on vacation. So yeah, but I do think we have a couple of really interesting topics, and yeah, maybe we can just jump in if you want to.
Yeah, let's do it.
Okay, I do have a question for you. I would like to start off.
Yeah, sure.
So,
Go ahead.
um, I experienced a minor change to my portfolio this week, and yeah, I was wondering how your portfolio changed this week because I think there was quite a dump since our last episode last Friday. Yeah, what about you? Do you have any changes in your portfolio?
Yeah, I do. To be honest, I didn't really check my relative values of BTC and ETH and Sol, so I'm
Mm,
not sure about that. But considering the fact that BTC declined, I think like 25% roughly last 30 days, my portfolio is probably a little bit more ETH and Illuvium weighted now than even before because I think despite the dump, ILV, I think it did well on a monthly basis roughly.
mm,
I did notice though today when I was rebalancing my Solana Yield farms that my Solana exposure has dropped in half, and so I now have half Solana, half USDC. So that was quite interesting to see.
what could
Um,
this be? I don't understand.
yeah, I'm not entirely sure either. So I do know that I've been, on my yield farm, I've been harvesting USDC pretty religiously
Yeah.
for the last couple of weeks. Maybe that is one part of it. And the other part is probably, I think, impermanent loss on some LP pairs or something.
Mm,
But no, actually, you would expect me to get more Sol than if I had a
mm,
USDC Sol LP pair. So I'm also a little bit confused myself how I ended up having so much USDC.
mm.
But yeah, I'm not necessarily, I don't feel bad about it necessarily. Uh,
Would be great if there is some tool out there who tracks this, right?
you mean like, sorry, I always forget the one. What's the one that we checked yesterday?
I'm blanking on the name right now as well, but I think the concept behind this of having historical data in a nice format,
Mhm.
and I think there is a need out there, and
Yeah,
I'm in crypto for over 4 years by now, and I do it on spreadsheets. You as well, right?
correct.
And what the fuck is going on? So yeah, we live in a 2022 almost, and yeah, I think there should be better solutions, more
Yeah, I
convenient
agree.
ones.
So
Yeah.
what happened to your portfolio?
Not a really big thing, but I thought about one thing over the last couple of days, and some minor changes, like 3%. Um, so the fluctuation, obviously, this interferes with my overall portfolio quite a bit. I have pretty big of an Ethereum back, and Ethereum went a little bit down against BTC, so my portfolio is roughly 70% Ethereum. But three minor things changed, and one is due to the fact that you brought up to my attention, and two are more born out of randomness. So the first one is, and this could be an interesting topic to research for some of our listeners, the JET protocol on Solana. It's a lending and borrowing protocol. I started DCAing into it a little bit. Thanks to your research, I think you've done some amazing research. And there obviously this isn't a clear home run, and there are some risks, but yeah, we are in crypto, right? So I think I will start DCAing a little bit more into JET protocol, and I take this from Solana, and I don't take this from ETH or from BTC. I take this from a Solana portfolio. So this is the first thing. The second thing I did is I was wondering. the last week we talked about what narratives are out there and if we think that we are positioned in the right way for those narratives. Do you remember our discussion?
Yeah, definitely.
Yeah, and I listed out a lot of narratives, and I basically boiled it down to four narratives. I'm quite underexposed right now. I will run through them real quick, but then I will get back to the other two changes I did. So I think that I'm in the crypto plus gaming space. You can call it also play to earn or play and earn. I wouldn't call it NFT because the profile picture stuff it's a different category for me. So
Yeah,
I
great.
think I'm pretty much underexposed to the let's keep to the frame crypto plus gaming. Um, I started doing a little bit about this, but not relevant for now. Then I feel like I'm underexposed to layer 2 solutions, so I built up a little bit of a Matic position, but really relevant as well. I think I'm really massively underexposed to stablecoins. This is bugging me, and I need to think about how to build up a better stablecoin position. And the last one is one point where I actually did something. So there was this big discussion the last following weeks about alternative layer ones. It started off with what's the name from the synthetics guy? Kane, right?
Yes, Kane.
Yeah, Kane and Suzu got into a Twitter argument, and it basically expanded a little bit to an Uncommon Core podcast episode where Hazu, he's a crypto researcher and writer, like he always says about him. But I think he's more an investor, honestly. And yeah, so not just a researcher and writer, Hazu. Greetings, by the way. And I think that the alternative layer one solution is interesting. So I did the following. I started DCAing into Near Protocol. Have you heard about Near Protocol?
I've heard about it, or at least I've heard of it, but I'm not entirely sure what it is. Is it like an optimism clone or something?
No, no, no. It's at least as far as I know, it's pretty similar to Solana. It's
Okay.
built on Rust, so not on Solidity. It has some. I think there are also Eastern European founders. They live in Silicon Valley. They're pretty much venture funded. They have some issues that they have some really low traction within the US because their token might be security. So yeah, but they're pretty near and similar to Solana. There is this ecosystem fund coming up. So I think that Near Protocol could get from rank 35 roughly right now over the next couple of months in the top 20. So it's not a big bet I'm taking. It's just below 1%. But I think that I'm a little bit underexposed to also alternative layer ones, and I need to position myself a little bit more. And over the last couple of months, I thought about, okay, let's wait for the euphoric phase. Let's sell some of my cryptos, and then I will reallocate. But I think that's not the best way. I start DCAing into it because right now the market is slow, the market is quiet. And I think right now is a good time to DCA into it. So I could do more research about New Protocol and talk a little bit more about it over the next couple of episodes. But for now, in regards to time, this is something I start DCing into it. And the last one is it's roughly also half of a percent of my portfolio, and I don't know what to do with it right now. There is this protocol which is called Lyra. You heard of about it, right?
Yep. It's also by it's a spin-off of the synthetics community, right?
Yeah, exactly. They do something similar to Luna, and they basically incentivize other protocols to build around the ecosystem. And Lyra is some options protocol, and I interacted with the protocol a couple of months ago, and I was on a Discord as well, as you were as well, right, Mark?
Yeah, correct.
And it's super interesting. So the airdrop hunting stuff, it basically falls into this category, but now the airdrop hunting stuff gets a little bit expanded into Discord hunting, I guess. There is so much shit posting going on in Discord, like GM here, GM there. And I don't know if you've noticed it, Mark, but quite a few channels, they bring out some announcement like, hey guys, whenever we do an airdrop, we won't incentivize Discord usage, so please stop spamming. Yeah, so quite interesting. So,
Yeah.
yeah. Sorry, go ahead, please.
Yeah, sorry. I have a funny anecdote with regards to that.
Yeah, sure.
I joined I joined the Discord channel from I think Lifinity Protocol. So that's like
Ah, yeah,
it's like
yeah.
a text aggregator. They're also like in order to be able to talk or something, you had to first type GM in the Good Morning channel. So yeah, I think the GM thing is definitely becoming a thing.
Yeah, absolutely. Have you listened to the episode of Messari with Bankless?
I've only listened to the first quarter of it.
Okay, then just a quick spoiler, but that's nothing a topic that we should discuss in depth. It's not relevant for now. The Masari guy, he gave 10 predictions about 2022, and one prediction was that the phrase "whack my," we all gonna make it, right? That this
Yes.
is this is the first time that he thinks that actually something along those lines will stay around, and I think that's pretty interesting. And I'm looking forward to how far this meme could basically expand into different ecosystems. So the first time, one of my friends, I know some of you are listening. Whenever you send me a Wagmai, it's a sign, and I really like it. And yeah, maybe we can bet on the over under if this will be achieved within the next 6 months. I would take the under, so before 6 months. But yeah, I thought it was quite interesting.
I think the Good Morning is also it's. I think that one is already further. How do you call it? Incorporated into the public vocabulary.
Mm.
I saw like the Nike Twitter, I think, typed it, and I think the McDonald's Twitter and Visa Twitter. So there's already a lot of like mainstream
Nike, Nike
companies
said
that.
GM.
I think so. Yeah, yeah. Well,
Wow,
Nike
that's
also had a
nice.
really interesting. They bought this NFT company. Did you see that one?
I heard about it yesterday, but I'm blanking on the name right now.
It's like, yeah, FRKT or something.
Yeah, yeah,
Yeah,
yeah,
I had
yeah,
never heard of it, but it
yeah.
looks pretty amazing though. So I think it's definitely a smart
Nice.
purchase. But yeah, and just in general, I think crypto vocabulary is slowly entering mainstream. And I think GM is a
Yeah.
very easy one because it's all something you already say, and it's also, it
Mm.
stands for basically a world that never sleeps. So I think that's,
Yeah,
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 easy
that's a
to
good
adopt.
point. Man, this reminds me so much about my old days of gaming. It was basically every day you log on, you say, "Hey," you say, did you play Counter-Strike?"
No, not that much, not that much.
Okay, so there's also this vocabulary, the GL and
Oh yeah, yeah.
HF. Good luck and have fun. When I think you played some Warcraft 3, right?
Um, Not online, unfortunately, but I mean, I
Oh,
know these kind of things, and also
yeah,
GGWP,
yeah,
like well played.
exactly.
That one is, of course,
Yeah.
very,
GG, no
very
Ray.
famous. Yeah. So yeah,
Yeah. Okie dokie. Yeah. So this is my little bit of rambling about my thinking right now in my portfolio. Do you have anything to add to this, some comment, or do we want to transition to the remarkable things that happened last week?
I just wanted to add that I also indeed started DCAing into Jet. So yeah,
Mm. Okay, perfect. So listeners out there, you might want to take a look at it. You might want to listen to some of the episodes, but obviously, like always, no financial advice. Do your own due diligence. Mark and I were doing our own due diligence, but and I think Mark as well, we have some hope that the guys and girls over there are quite good guys and girls.
yeah. So I would say it's definitely not a perfect play, but it is a relative value play, especially because
Mm.
it's at all-time lows, and I feel like it's definitely mispriced in terms of what the team can do and what the current price is. But yeah, we'll see. I could be very wrong, and the
Yeah,
catalyst won't happen for at
yeah,
least a month or two, so it could go down
yeah.
further.
Okay, perfect. Yeah, then let's transition to the remarkable things. Okay.
Yeah, let's do it.
Okay, I will just kick us off and then let me know if you have some points. But I have three topics I would like to go through if possible.
Sure.
So the first one is it was quite remarkable. So you do know that I'm in the inner circle of Dr. Julian Hosp. I mentioned it a couple of times, right?
Yeah.
And I listen to his updates about once a week or so, maybe twice a week. And he said something really interesting, and this got me thinking. So I don't know the exact time frame, and I don't want to use this as a starting point to talk about prices, but he said something along those lines. He said that there was this pump a couple of weeks ago, and the pump basically was a 10% pump in BTC. I think it was roughly around the time of the speculation that there might be a future Bitcoin ETF. And the thing that got me thinking was the following. So the price jumped by roughly 10%. And do you want to take a guess on how much money approximately was needed to bring the Bitcoin price from, let's say, 55 to 65K? How much US dollar were needed for this?
I mean, it's probably going to be wildly off, but I would say billions.
Billions? A little bit more exact? What do you think?
Okay.
Take a
Um,
guess.
Okay, if I were to take a guess, I would probably say 75 billion.
Yeah, I would have guessed something similar. And do you want to hear something which is quite shocking in quotes? I think that
Sure.
um, I think that the exchanges have so little depth right now. So depth is basically the definition of price impact on the transaction volume impact on the price. So the research basically said that in order to move the market by 10%, 1.4 billion were needed. Just 1.4 billion. And
What?
I think that's pretty freaking interesting. Because there are some really big funds out there. If we take a look at the bond market, for example, or whatever market you want to pick, let's take the big hedge funds out there. They have multiple hundred billions, and even a hedge funds with just a billion, it's a small hedge fund. So I think this is a pretty bullish argument, and as long as the market doesn't kill itself, the bond market will someday, most likely, if you ask me, will transition more into the crypto space. And then when those big inflows comes, the price will skyrocket due to the low depths of the liquidity. So yeah, I thought it was really, really interesting. What do you think about it?
Yeah, I mean, it kind of blows my mind a bit. I
Mm,
did read a tweet from Kyle Davies from Three Arrows Capital,
mm,
like a week ago or something, or 2 weeks ago, about how shallow the liquidity depth was.
yeah.
Yeah, that makes me definitely interested to see what it
Mm,
will do in the near term. And I'm also just really surprised to see like that the liquidity is so shallow. Is it like that?
mm.
Has everyone gone to other tokens just because Bitcoin has underperformed this year, or
No,
what
no.
is causing the liquidity to be so low?
Yeah, take a look at the exchange inflows and outflows. I don't know. Do you do this on a regular basis to check the inflows and outflows on the exchanges?
No, but I know like people are withdrawing Bitcoin to their wallets, like to cold storage.
Yeah.
But do you think that's a big factor?
Absolutely. So the exchange outflows, so the exchange balance is basically at a, I think, 5-year low right now. So really freaking low. And yeah, this is a big factor, obviously.
Okay. Yeah, interesting, Patrick.
Yeah, I would like to do some more research about it. But yeah, this was something that got my attention. And another thing I would like to hear your thoughts about.
hmm
Or do you have any topic, or do I just proceed with my topics?
I could squeeze in a couple of my topics. They are relatively short.
Yeah, sure.
So one thing that happened this week that yeah it gave me a good chuckle was some art that Daniela Sesta, who is like the creator behind some of the protocols like Abracadabra, Popsicle
Mm,
Finance, and Wonderland. So he had some art commissioned by some kind of
okay.
meme artist, and yeah, it was yeah, it's maybe a little bit childish humor, but it basically shows Daniela himself in a not very flattering pose, who is basically taking a teddy bear, in the behind, basically.
Ah,
So
yeah, yeah,
with the analogy
yeah.
of the bear market, I guess.
Yeah.
And then another person chimed in and then added Tetranote, who is a very famous
Yeah.
whale in the Ethereum community, and yeah, he is a literal whale in terms that he's probably a multi-billionaire, but he's also a whale that he uses a whale avatar or like an orca avatar.
Mm,
So he added basically that he included that the bear was at the same time, uh, eating off the whale basically. So
mm.
um, yeah, I thought it was just hilarious, and it reminded me of earlier art that Tetranote had commissioned for himself, which is an interesting combination of like classical art, like classical poses,
Mm,
and then combined with modern elements, so like Pepe faces and frog
mm.
faces instead of the human faces, but on top of the classical art, basically.
Mm,
And just to think of that as crypto becomes a bigger part of the mainstream and also of the nouveau riche, I think art and culture and art will also change a little bit more to be more meme-like. So I think the meme
Mm.
factor will be huge in art. And I don't think you will have as much traditional art that you have right now in the future as the current generation of
Yeah, that's
Twitter
interesting.
native people become the mainstream.
Mm.
Uh,
That's an interesting take. Absolutely.
yeah, so I thought that was pretty interesting. And another thing that you pointed me towards, I think it was an episode of I think Frog Radio podcast, and I was just curious what your take on it was, because they mentioned that with their yield farming rewards, they would basically time the markets a bit. So they would look at the 12-month exponential moving average and I think 24 or even 26-month EMA,
Mm.
and to see if your your pump and dump or like harvesting token is in an uptrend or downtrend, and then
Mm.
time when you sell it. Because I don't really do it. Like I eyeball roughly the chart, but I don't really do it with a little bit
Mm.
of technical analysis. And I was just curious. So, what do you do with your yield farming rewards when you harvest them and swap them out for something that
Yeah.
you prefer?
Yeah. So this part actually, I listened to this part about 3 times because I didn't know what he was talking about, but after a while I catched it. And so this is what I did in the last couple of months, and this is what I'm about to do the next couple of months, hopefully. So over the last couple of months, I was basically just being lazy. I just put some money into farms and got my rewards, but basically never compounded them, which is quite lazy. And I never sold them. And yeah, I basically harvested them like every couple of weeks. And I did a little bit of research on how the prices performed, and it's just 99.9% of the time the token just goes freaking down. And there might be unicorn out there where the price might go up for a little bit of time, but so I was basically too lazy. So this is what I did, and for now I will do the following. I will basically, but this is just how I put it into my life. So every evening at 8 p.m. My time, I will take a look at my farms. I will harvest them and I will sell them, and I will put it into the farm again. So I will don't try to time the market because it's not a thinking I would like to get into my life. I enjoy not thinking about prices right now. I enjoy it really much, and I don't want to have some exposure at all into this category. So even though it might make sense from an EV point of view, that the EV might be slightly higher. Sorry for this mixing up the words. Even though the EV might be a little bit higher, the overall EV on my life, in order to feel happy, to feel relaxed, I don't want to take these considerations into my mind. So I will just try to build up a habit on harvest and auto compound every single day. Yeah, what do you think about it and what do you do?
No, I think what you do is pretty smart, and I think it's relatively similar to what I do, but I don't necessarily have that much of an aversion to watching prices. It's just basically laziness.
Mm.
So I try to do it every day, and in general, the yield farms that I'm in, the protocols, you're right that usually the token goes down 9 times out of 10. So I
Mm.
generally just liquidate it as soon as I can. Although I don't sweat it, so I try to do it every day. But sometimes, like I'm in bed and I think, oh, I forgot to I forgot to liquidate it for tonight, and it's probably gonna go
Yeah,
down like 3% or 4% over the
yeah,
night. But I won't get out basically.
yeah,
So yeah, I don't try to make it control my life either.
yeah. I think that's actually really, really good that you do it in this way. And the longer I'm in crypto, I've heard this multiple times for people who are longer in crypto than I am. They basically, the big guideline for them is, guys, just stay in the market. And I think you can get washed out of the market in multiple ways. By being too greedy, by getting liquidated, by getting burned out, by losing your interest. But I think one thing which is really underestimated, and I would like to talk about this in the upcoming weeks and months, this is really important to me and my heart itself. I want to enjoy the ride, and enjoying the ride is also something that I would like to do over the next 75 years, and not over the next 75 days. And I think that the concept of um, happiness EV basically is really underappreciated out there. So little people talk about it. But I think as long as you can stick in the market, you don't get liquidated by doing dumb shit, and you stay somewhat interested, and stay somewhat healthy from a mental point of view. I really mean the mental point of view. It's really important. I think the market will take care of itself. You basically won't get rich by being to getting a billionaire within the next 1 to 2 years. But I think the compounding interest stuff and the overall direction into the crypto space, I think as long as you stay in there, healthy from a mental point of view, especially, I think there's really interesting points. So this is something I would like to take into consideration, not just the EV of the crypto decision itself, but also how this involves my personal life. Because yeah, I think if you and I and every single listener out there is not healthy from a mental point of view, I think we will get wrecked sooner or later, and then the opportunity of our lifetime will yeah get taken from us.
Yeah, agreed. I think we should definitely talk more about it. Yeah.
Yeah.
Finally, Patrick, I do have one more thing that happened this week. I also mentioned it last week that this week there was a lock drop of Astroport. So Astroport is a new decentralized exchange on the Terra ecosystem, and it's made by Delphi, who is they're basically a bunch of big brain research shop who is now incubating their own protocols. And what I think that was interesting about this lock drop, so I think it's kind of a new concept, is that currently the biggest decentralized exchange on Terra is TerraSwap. And what they did is they are kind of like doing a vampire attack of TerraSwap. So basically, if you're a TerraSwap LP, and let's say you provide Luna UST, for instance, then if you agree to bring over your liquidity or your LP pair basically from TerraSwap to Astroport, you will get an airdrop. And it is also locked for a period of time. So the longer you lock it, the more the more tokens you get basically. So I think this is kind of like an interesting concept because it solves the cold start issue. So let's say that they were just going to launch a new DEX in a standard way, then it would be very hard to build traction because LPers wouldn't like to LP there since there's very little swappers on Astroport. So with this, you kind of solve both issues in a very interesting way. So this is also another thing that's going to be a minor change to my portfolio. I will enter a little bit into this in this LP as soon as I get my Luna. It's still on the way.
And this lock thingy, you lock your liquidity and you get paid in the Astro token, but the Astro token is not locked, right?
I think you can decide like yeah, you're right actually. So I think the Astro token, I think it is to be honest, I'm not entirely sure even. Like I didn't. Yeah, I need to research it more. But what I think what has happened that you lock your liquidity, that's for sure. And the longer you lock it, the more asset tokens you get. But I think the asset tokens, they're also not immediate. So, yeah, so this is what they're doing with the asset tokens. I think you can get to choose between either having them locked or putting them into an Astro USDC or UST pair, basically. So you can either get them now or you can provide liquidity, and then you are locking your liquidity in the Astro UST LP. So this also provides instant liquidity in and out of Astro. So it's just very interesting the way they did it in terms of game theory. But yeah, I definitely need to do more research before I enter more into it.
Okay, perfect. Yeah. Do you want to jump into things that excite us? I do have a couple of topics.
Yeah, sure.
Okay, perfect. Do you want me to start or do you want to start?
No, you could start. I have only 2 topics, so.
Okay, perfect. Yeah, there are basically 2 things that excite me right now, and the first one is just as a quick spoiler for our listeners out there. So we are working on a Solana yield farming from scratch course. We develop videos for this. We outline content. We record content. We produce videos. We will put them on YouTube. We will put them on Udemy. And the goal of this whole thing is that I've started taking a look at Solana about roughly 3 or 4 months ago, and I was basically clueless on what opportunities are out there, what different protocols I could use. Then the concept of leverage yield farming came up, and I was just starting to get a little bit better grasp about how does this earning interest on our crypto tokens even how does this work? What is the lending and borrowing protocol? What is yield farming? What is leverage yield farming? What are different pairs out there? So this is one thing that's got me pretty excited. We are basically recording roughly one video a day. This is the goal, and we will put it out there. And another thing that gets me excited is a thought experiment I have in my mind. I heard about this from, oh, where was it? Was it Jordi Alexander on the up only episode? I'm not quite sure. But yeah, do you want to hear the thought experiment, or do you want to comment on the Solana course first?
I would just like to say that I think you're overselling my involvement. I'm just giving you some pointers, and you're doing 90% of the work. So yeah, you're being very generous in your usage of the term "we."
No, that's not true. You give me such good advice and guidance and feedback for this. I'm producing the videos for now, and people will see my face hopefully, and in the videos. But the content, I think I couldn't do it without you. So yeah. Yeah, for the thought experiment, okay, this is quite interesting and maybe interesting for your Illuvium backs. So listen up, Illuvium backs. The theory is the following. So there was this bet a couple of years ago, and the bet was basically, so there was this discussion, what will outperform what? And a couple of years ago, there was this discussion, will DeFi protocols outperform Ethereum, or will Ethereum, so Ethereum the asset, ETH the asset, will it outperform DeFi coins? And a couple of years ago, there was this phase where DeFi coins basically outperformed Ethereum, and this was over a couple of weeks. It was the DeFi summer. And out this DeFi episode, a couple of protocols were born, like Yearn, for example, Sushi and stuff like this. But since then, ETH outperformed them like crazy. Yearn, for example, Yearn was one of the big inspirations back then, but now I think it dropped against ETH by over 90%, so it got totally wrecked. And the thought process is basically the following. DeFi as a category, I think it can outperform ETH, but there is no way that you could invest into DeFi in order to outperform ETH. So even from a theoretical category point of view, if you were bullish on DeFi, and if you were to bet that that DeFi would outperform ETH, it might be true, but there's no way to invest it. Even if you take a look at the DPI index, so this is a basket of different tokens, you couldn't do it because protocols that outperformed ETH, they weren't invented back then. Just to give you a real concrete example, Uniswap outperformed ETH for a couple of months, but over the last couple of months, it underperformed quite massively. And then a couple of months ago, the concept got born, which is protocol-owned liquidity. And some protocols got born out of it. And let's take Ohm, for example. And Ohm did outperform ETH for a couple of months, but now it starts to underperform it as well. So the theory is basically the following. You can be right that particular categories outperform the native asset or the thing that you want to measure it against, but there is no way to invest in it, no matter how smart you are, because those tokens aren't invented yet. And you could also take this concept and copy it over to different things. So let's say, for example, you are pretty bullish, or I am pretty bullish, or we are pretty bullish on crypto plus gaming. I think there might be no way for us to invest in it right now because those tokens aren't born yet. And we could invest into the MVI token, which has pretty broad exposure to the metaverse. We could pick some particular winners like Axis, or AXS, or even Illuvium, or the Mana token, or whatever you want. But the concept is basically that even if you're right on that the category will outperform the asset, there is no way to invest in it. So what can you do? You can basically do two things. You can try to be a trader and be early to new trends, or you can just keep your mind at calm, be okay that you won't pick the winner and make the most profit, but you are also not the loser and don't go down 90% against the base asset and ETH. So you could just put your money in ETH or BTC and some more what is it called, established things, and yeah, you basically don't do something wrong with it. So this is a pretty interesting take, which got me thinking a lot. And yeah, what do you think about this concept overall, that there is no way to invest into a bet where you're bullish on? And yeah, as a second question, yeah, what do you do about this for your personal portfolio?
So, if I were to clarify what you just said, basically what you're saying is there are no baskets of certain categories of crypto, like a DeFi basket or a play to earn basket or a metaverse basket that outperforms ETH over a longer period. Is this what
Yes,
you're claiming?
yes.
Okay.
Nothing where you can invest in right now.
But hasn't MVI outperformed ETH over the last, like 3 quarters?
It got launched in May, I guess, or so. I think it's pretty break even. So it underperformed for a while, then it was
Hmm.
break even, and now I think it's already at underperformance.
Okay, wow, that's interesting. Um, yeah, so I think you may be right, or he may be right. This could definitely be a thing. So yeah, right now I'm also playing into this because, for instance, instead of buying a basket of play to earn on Solana, I am just holding the Sol token and yield farming with it. So in general,
Mm,
I would even make it a little bit stronger, your statement that not only you know does it not outperform ETH or Sol or whatever the gas token is, I would
mm.
also say it for sure doesn't outperform the gas token when you yield farm for a high percentage on top
Yeah.
of it. So let's say you have ETH and you
Yeah,
get
that's an
like
interesting point.
30% APR of farms on top of it, which is it's achievable. That makes it even harder to outperform. So
Mm,
um, yeah, I would say that for baskets right now. But I do think that as the crypto market matures, there will be more baskets and they will start outperforming. I think as crypto matures, it will behave more like the stock market, where category ETFs, they very frequently outperform, and you have a ton of different ETFs to choose from for sectors or categories like the metals ETF or technology ETF. Like you have so many different ETFs that are
mm.
categories. So I think it's just that yeah, basically the basket protocols are just, yeah, they're very few and far between still. There's not that many choices, and
Mm.
there's not that many really, really good ones yet. Yeah, I think it will happen at some point. But yeah, good, interesting point.
Yeah, so I don't know what exactly to do about it, but for me, it's gives me more confidence that my ETH bags are not a mistake. It might be not the best choice. Yeah, but it gets me sleeping calmly at night. So yeah. Okie dokie. Yeah, I think those were my two exciting topics for this week. Do you want to add anything, or do we want to jump into our Solana portfolio challenge?
Yeah, sure. I have a couple of short things. First of all, I saw an interesting tweet that claimed that 2021 was actually the year of VR, and that is expressed by the fact that there have been more Oculus sold than Xbox. And
Huh?
it just really blew my mind. Like, an Oculus is quite expensive. I think they're relatively similarly priced to what an Xbox costs, and
Hmm.
it has outsold Xbox. So yeah,
Wow.
that's kind of impressive, I think. So for me, this is something that has gone totally under the radar for me,
Hmm.
and
That's
it makes me
interesting.
interesting to see what will happen next year. As also as the working from home gets even further
Hmm.
established, and maybe companies will also start using Oculus for meetings, like VR meetings and these kind of things.
Does Facebook use on Oculus?
What do you mean? Do they use it? Like they've made
Own
it,
it.
right? Yeah, yeah. I think they,
Okay.
I think that they are the creator of it,
Okay, interesting.
and I think it's
Yeah,
Meta now, but I
yeah.
also still call it Facebook.
I just read it. Oculus is a division of Meta Platforms, previously known as Facebook Incorporated. Okay.
Yeah. So yeah, I just thought that was interesting,
Yeah, absolutely.
and just another thing that is maybe like yeah, not excites us in terms of a big trend, but maybe like a little bit of maybe alpha, is that you know the platform Orca, right? Which is the
Hmm.
centralized exchange and a farm on Solana. They have this concept called aqua farms, and I think what it means is basically they provide their own token as liquidity for certain farms, and they direct it to different LP pairs every couple of weeks. And also sometimes they get incentives from other protocols to basically promote their protocol on Orca, right? It's similar
Hmm.
to how Dinoswap works, or any of these protocols. So yesterday, I think the Orca Aqua Farm, it rotates every Thursday night at 8 p.m. every 2 weeks.
Okay.
Every 2 weeks, so not every Thursday, but every other Thursday. And last night was one of these occasions. And when I checked it, and I was probably like 2 hours late or something, the yeah, the APR on I think it was USDC and staked Sol, which is from the Lido from the Lido staking
Hmm.
protocol. It was like over 600%. And
Ah,
it
wow.
probably launched even higher. So when I checked it this morning, it was 133%. So it's already gone
Wow.
down a lot. But I would have expected it to go down even more than to that. I thought it would be
Mm.
like 33% maybe at this morning. So it's still quite a nice APR.
Mm.
So I was wondering, yeah, and I was thinking maybe it's just good to to time it, because I've been in these kind of farms before where I'm at the farm. I'm already LP'd when it launches, and generally you get like huge APR for a couple of minutes, hours,
Mm.
and it still adds up. So maybe it's worth next week to check the Twitter, because they announce it every time, and just LP in advance of it, and just get
Mm.
that huge
Interesting.
APR spike for like a day, and then you can get out of it.
Mm.
So this may be like a little bit of mini alpha. And another thing I'm excited about is that I've been researching borrow lending protocols on different chains. I actually did it already last week, but I didn't mention it, didn't get to mention it yet. So I've been researching about 25 different borrow lending protocols on all kinds of different chains. And what I noticed is that, first of all, the UI is yeah, that it hasn't been standardized yet, So a lot of people have cloned the Ava UI or doing something similar,
Mm.
and a lot of other people done something similar to Cream. But there, I still feel like the UI, there could be a lot of improvements still to the UI of borrow lending protocols. So it's definitely not optimized yet. And also, what is really interesting is that the loan to value ratio. So
Mm.
just for people who are unfamiliar with it, the loan to value ratio basically says what percentage of what you deposit can you loan. So let's say I deposit 100 USDC, and USDC has let's say it has a 75% loan to value ratio. That means I can borrow up to $75 worth of another token, like Bitcoin or something. And what was interesting to me is the loan to value ratios, they vary wildly across protocols and across
Mm.
chains. Like I've seen USDC for loan to value at 60%, and I've seen USDC for loan to value at 90%. This is like a huge gap, because imagine
Mm.
if you can borrow 60 euro or 90 euro, how much you can extra, the extra yield you can get with your yield farm is like one third more. So it pays to research it, but I also wonder how safe many of these borrow lending protocols
Mm.
are.
Yeah, exactly.
Because for instance, Aave, they have I think they have a pretty conservative on USDC. Maybe it's like 70% or 80% or something. And they did really like they hired like a research company and to do machine learning on different scenarios to see the odds of their protocol getting liquidated due to these ratios being too generous. So that leads me to think that some of the protocols, their LTVs may be a little bit too degen, and sooner or later they will get exploited by a financial exploit.
Mm.
So I thought that was just interesting, but nonetheless, I still may may ape into them, because you can get really nice yields if you yield farm with this kind of LTVs.
Mm.
So yeah, just thought it was interesting.
Yeah, absolutely interesting. I need to do a little bit more research on my own, why different protocols choose different LTV ratios. But I have a question in regards to the new pools.
Sure.
So the staked Sol USDC pool. Um, I'm wondering, so if there is a new pool, aren't you worried that this might be a risky one because the total locked value is super low? So it's not that well tested. It has not that much Lindy. Or do you just trust the protocols or Orca that if Orca comes up with a no pool, you basically give it the legitimization of Orca and not the pool of itself? How do you think about this?
Well, for me, a pool, like one pool and another pool, they are using the same smart contracts, right? So I don't think a new pool is necessarily more risky than an old pool. Of course, you can have some asset risk, but I think like a staked Sol, USDC pool is not that much riskier than a USDC pool that has been around on Orca. If they're both on Orca, they're both using the same smart contract, so they're having the same smart contract risks. You only have a token risk, and of course, staked Sol that is from Lido, and Lido is like a huge, well-known protocol. So I think there's extremely low risk for these. Of course, some of the aqua farms, they are like tokens I've never heard of, like Uga or something, and USDC. Like for those, you do have token risk, but I still think the protocol risk is really low.
Hmm.
I mean, I still think like the smart contract list on Orca, risk. So you just
Hmm.
risk the token price dumping. That's the only thing.
Hmm. Yeah, interesting. I'm not quite sure if they use the same smart contract, but I think yeah, don't as long as someone doesn't put super much money in it, I think the risks are quite low. Yeah.
Okay, I think at least for sushi, like the sushi factory, for instance, all those LP pairs, they use the same like factory smart contract to generate the LP pair. So you
Yeah,
know,
you could be right. I just don't know.
so I think there's no risk with regards to that. And I would even say probably there is less risk if you have an LP pool because it means that people are, in terms of price risk, because people are actually pooling their liquidity instead of dumping it.
Hmm.
So your liquidity is actually being locked up into some protocol, which makes it less likely that people will sell the token. So I think the
Hmm.
price risk actually may be less than if they didn't have this promotion. Of course, unless you get paid out in, like, let's say you get paid out in stake SOL as a promotion, then
Hmm.
of course people could farm and dump it, and that would definitely cause some price risk.
Hmm. Yeah. Okay. Interesting. Yeah. Thanks for bringing it up.
Yeah, no worries.
Do you want to take a look at our portfolio challenge?
Sure.
Okay. Yeah. Do you want me to start or do you want to start?
You can start.
Okay. Just as a quick recap of last week. So last week, my portfolio was at $865, and it increased to drum rolls $860. So yeah, roughly $4 of gain. But yeah, it's that the Sol price appreciated a little bit just by 0.19%. So yeah, it might be not due to my awesome yield farming because I just increased my Sol allocation from 4.71 to 4.72. And here is where my strategy might be not that smart. So I basically do two things right now. I have the most of my coins in a yield farm where I get, I think, 25% yield roughly. And this is something, yeah, if you put in one soul, at the end of the year, you have 1.25 soul if the APR stays the same. So yeah, you can imagine that the yield you're getting is quite nice, but it takes some time. And the other thing I'm doing is, yeah, I don't know if this makes sense, but I don't like it for now. Um, I basically do a combination of yield farming, airdrop hunting, sorry, airdrop hunting, and also some gamble on the market right now. Um, I am 2x long on Drift protocol, and I do this for the reason that they don't have a Drift token right now, and if they have a Drift token, I might get incentivized quite nicely for my being long position there. And the other bet I'm taking is basically that the funding rate is has been over the last couple of days. I don't check it every day, but most of the times I get paid to being long. It's an arbitrage opportunity for manga markets. But yeah, I might also pay some fees over there because I don't check it every day and I don't open and close the positions every day to be participant of the funding rate. But my bet was basically that last week the sold price was at roughly $180, and I thought that the price would go a little bit up. But yeah, if you take a look at the whole market, yesterday the Nasdaq got slaughtered by roughly 3%, and the day before it jumped by 3%. So the markets are super freaking weird right now, super freaking weird. So I don't know if it makes sense to have this long open, because I don't want to speculate on the prices, and being 2x long basically means that I speculate on the markets going up. But if I had a gun to my head, I would um, uh, take a guess that the markets will decline even more till the end of the year, and then it might go up. But I don't want to talk about prices. It's just the EV I'm taking with the back is with this bet is in the short term. It might be slightly minus EV because I have to pay funding rates sometimes, and betting on the market goes up. I think it's not that high EV right now. But if I take into consideration that there might be an airdrop one day, and other protocols they go more into the direction that you actually get airdropped in relation to the volume you did there, and not just a single transaction, I think I might be at a good place to participate from an airdrop. And this is what I will do for the upcoming week. Most likely, I will stick to my yield farm, where I get super good yield on my Sol. And basically don't hold any stable coins right now. And I'm also 2x long on Sol in order to be eligible for an airdrop. And if the market goes up, nice. If the market goes down, so be it. It's not a big position, and this is what I do. And I'm basically what is it called in English? I didn't go back. I didn't go forth. I stayed on the place. You know what I mean, right? And
Yeah.
this is what I did. What do you think about it? Any comments?
Well, yeah, I think, of course, what you do is, it's maybe net EV, minus EV in short term, and it could be that we'll have a pump of Solana at some point, and then you will vastly outperform me, and then there will be an airdrop, and then it'll be even higher. So I think you're just taking the gamble to see how it will go, and I think it's reasonably sensible because the price of Solana is probably going to go higher over the long term. So yeah, I think it will be interesting to see how it will go. So I like that we have different styles, and I have just a boring like a yield farming style, and you do all kinds of different things. And yeah, it will be curious to see like in 3 months or something if your style has outperformed the boring yield farming style. So yeah, I wouldn't be too ashamed or something about your performance because you're making a bet for a longer term, which may play out negatively in the short term. So yeah, we can't really tell anything about it yet.
Yeah, yeah, that's a fair argument. You are the one who has basically guaranteed yield, guaranteed in quotes, no smart contract risk and stuff like this. Guys, do your own due diligence. But yeah. Do you want to transition into your portfolio? How you evolved over the last couple of weeks? A week, sorry.
Yeah, I just had one more question about what you did this week.
Yeah, sure.
Did you mention that you also invested in Mango to go short to get the funding rate, or are you just going purely double long on Drift?
What do you think?
I think only the latter.
Yeah, exactly. So if I would do it more thoughtful, and I would get a little bit more yield out of it. And it's part of the story you told a couple of minutes ago about being a little bit lazy and prioritizing sleep. And yeah, if I would take 10 more minutes out of my day to make it a little bit more better, I think I would have made more yield. But it's just 5 Sol in quotes, just 5 Sol. So yeah, you do have a really good point, but I'm just too involved in other things right now. So I don't maximize the EV out of it.
Okay, then it's clear. Yeah, that for me, last week my dollar value was 919, and this week it is 933. So I gained roughly $14. And I think I outperformed Sol this week because my portfolio increased by 1.53% and Sol increased by 0.19%. So yeah, it was a decent week. Also considering the fact that I had to take some costs because I made an account on Mango, and that cost 0.035 Sol. So my strategy for this week was to open an account on Mango, which is a protocol that allows you to borrow land, but they also do other things like going short and long and perpetuals and these kind of things. But I just used it for the borrow lending aspect. And what I did is that I deposited my Sol into Mango, and then I borrowed Cope, which is it's kind of like a protocol where you can invest in other traders and you can see their performance and basically you can invest along with other traders, I think. I invested in the Cope USDC farm on Orca, and it had pretty good APR when I entered it. I think it was over 100%, and I just stayed into that. I did have tremendous impermanent loss on this pool because I think Cope almost halved last week.
Wow.
So it wasn't maybe it was a little bit too risky, but it still did reasonably well. And I'm planning to get out of this pool because, as I just mentioned in the previous section, the aqua farms have happened yesterday and they have shifted out of this pool, so it's no longer
Hmm.
as lucrative. So I'm not entirely sure what I will do for the upcoming week yet.
Why did you pick Cope?
I mean, I picked the Coop USDC pair or maybe it was Coop or Sol actually. I think it was Coop Sol, sorry, the Coop Sol pair on Orca because I thought, just to get a calculation, and the APR was one of the better APR pools I could enter with my borrow lending strategy. So, what I try to do in general is I try to deposit my Sol and then I borrow things on it on different protocols. And Cope is a token that very few protocols that you can borrow it on. You can only borrow it on Mango. And also the TVL of the farm was quite low. So this is why the APR were relatively high and relatively sustainable. So I thought it would be a good pair because Coop is a really like unpopular coin that is not used that much. So people won't ape into the farm that much and dilute the APRs.
Hmm. Hmm. Interesting.
And and also I didn't swap for Coop, so I just
Hmm.
borrowed Coop. So I
Hmm.
didn't take as much of a price risk as I would have if I just swapped for the Coop.
Hmm. Would you do something different if you were to get a week back and you have the knowledge that you now have? Or would you do the same?
I think I would still do the same. It performed really well still, even though I had impermanent loss. I think,
Hmm.
as you can see, the yield was still quite nice. And there weren't that many attractive alternatives, at least for my kind of strategy last week that I was
Hmm.
looking for. So this was the best one.
Hmm. How many markets do they have on Mango?
You mean how many tokens can you borrow on Mango?
Yeah, basically, how many pairs and how many tokens can you borrow there?
For I would say around 10 or something.
Mm. And how did you came up with the one Cope? So why did you set it against the other nine ones? Can you go roughly through this your thought process there?
Yeah, sure. So what I do is I deposit Sol into Mango, and then I have a choice of borrowing any of the tokens that Mango provides. So it provides USDC, USDT, Serum, Cope, Bitcoin, etc., etc. A bunch
Mm.
of tokens that are popular on Radium, for instance, on Solana. And then what I do is I check out of these combinations of tokens, what are the farms available out there, and what are the APRs. And then I
Mm.
also check what are the borrowing rates on these tokens. Because, for instance, if you want to borrow the Radium token, you pay like 50 to 60% or even higher APR just to borrow it. Whereas if you borrow USDC, you pay 10%. If you borrow Sol, you maybe pay like 1%. And if you borrow COP,
Mm.
I think you also paid very little, maybe like less than 1%. So COP was relatively attractive from that angle. And also because, out of the combinations of those tokens that I mentioned, COP is really like an unpopular token. So
Mm.
you have less risk that your pool will get diluted very quickly. And where, let's say I didn't do COP, but I used like a Serum USDC or something. You have also a farm like that on Almond, for instance. That one dropped. I think the APR dropped from like 100% to like 60% or something this week. So because Serum is a relatively popular and widely held token, people are more likely to enter the farm and dilute the
Mm.
APRs there.
Mm. Yeah, makes sense. One quick question
Hmm.
to Mango. Um, Mango is an isolated market, so you basically you can borrow in the protocol itself, and they have pools in themselves, and you can't take the corp out and put that somewhere else, right?
I can, I think. So,
Okay.
yeah, as far as I'm aware, it doesn't work that different like
Mm.
from Aave or something where I can
Hmm.
deposit Sol and then I can borrow any of the tokens and I can take them
Mm.
out and do whatever I want with it. I could sell them, I could
Mm.
swap them for something else, or I could yield farm with them as I did.
Okay, that's interesting. Then maybe lacking in a little bit of knowledge there because I thought Mango Market can hire can offer those high loan to value and those high APRs because it's isolated because it's all within their platform and they can manage it in this way. And then maybe an idea for you and maybe some listeners out there. You know Solend, right?
Yeah.
But let me think if I share this alpha with you. No, I'm just kidding. Solend is doing something that's super interesting. Usually on lending and borrowing protocols, if they have an incentivized program, they basically give you some incentivization for supplying. Let's say, for example, you supply your Sol and you would get 3% interest on it. They will give you additional 5% and paid in their own token. And in order to borrow something, let's say, for example, the borrowing cost would be 5%, and they will incentivize it by 7%. So you basically get paid to borrow. And Solend is doing something super interesting. They basically launched their incentivized program and they only incentivize borrowing. So you basically get paid to borrow, and they do this in order to test out if people are willing to supply more because the utilization rate is higher, which leads to higher APR for the suppliers. So maybe first, have you heard about this?
I didn't know that Solent was doing this, but for instance, Tarot, it works relatively similar. Like
Ah, okay.
they provide incentives to the ones that borrow and go long, leverage long.
Yeah,
Whereas the lenders, like I am usually, they don't get anything. They just get decent APRs.
yeah. So
But
maybe take a look at this. Maybe you can itch out some more percentages for you. If Mango isn't an isolated market and you can put funds in and out of there, I think you might have a really good yield farm for a couple of weeks. I don't know how long the Soul Land farm incentivization of borrowers works, but maybe there is some alpha for you.
okay, yeah, that's interesting. I checked the rates and I didn't think they were particularly appealing for Solent, but maybe I looked wrong. And with regards to Mango, there's one other thing that's interesting. So I can for sure tell you that it is not isolated in the way you think it is because I literally get the Cope tokens in my wallet, right? So I
Mm,
can do whatever I want with them.
mm,
And with regards to Mango, you can also go leveraged borrowing or something. I haven't tried it, but
mm,
yeah, for some reason, I think you can go longer than your LTV because
mm,
Mango also uses separate LTVs for the lending part and your borrowing token. But I
mm.
haven't dived too deep into Mango yet. But yeah, it's definitely differentiated in a little bit. But interesting about
Yeah,
Solent thing.
yeah, absolutely. Okay, perfect. We are roughly at 1 hour 10 minutes, and yeah, I'm pretty much done with my topics. Do you have anything else, or should we wrap it up?
No, let's wrap it up, Patrick.
Okay, perfect. Then today is the 17th of December. I think next week we will record on the 23rd, so one day before Christmas. Yeah, till then, guys, stay smart, stay safe. Whenever you have any questions, jump into our Discord. Feel free to ask any question whatsoever. Mark and I welcome you with open arms. And yeah, over the next couple of days and weeks, we will launch our Solana Yield Farming from Scratch course. And I think this is a really good jumping off point for your earn interest on crypto token journey. And we will also plan to do this for different ecosystems like Ethereum. And yeah, but Ethereum is quite expensive. Maybe Polygon, Phantom, Luna. Mark is getting into Luna. And yeah, just let us know if you have any preferences. And yeah, till then, Mark, talk to you later. And it was fun as always. Take care, my friend.
Yep, agreed. And see you later, folks. Bye bye.
Bye bye.